We're looking at what we can do to help, but I've got to tell you, logistically at the moment, it looks very difficult, both with armor and with jets.
The United States is committed to provide over $2 billion in military equipment to Ukraine.
The security environment in Europe is now changed and will stay changed, given what Mr. Putin has proven.
This is a price for our freedom, and it is better to pay in dollars or in euros, as the Ukrainians are doing with blood.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It is 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, March the 25th. Our top stories today. The U.S. has struck a deal aimed at helping the European Union replace Russian gas imports. That will pave the way for the bloc to receive more American liquefied natural gas. U.S. officials are worried that Russian President Vladimir Putin may lash out dangerously. Russian troops are bogged down in Ukraine, and some say Putin's tendency when boxed in is to escalate. Meanwhile, President Biden wants Russia booted out of the G20. And EU officials suspect China may try to soften the impact of sanctions imposed on Russia. They say Beijing may be ready to supply semiconductors and other tech hardware to Moscow. And we are going to bring you live pictures now from Brussels, where President Joe Biden and EU Commission President Ursula von der Leyen are set to brief the press after meeting to discuss energy supplies. As we mentioned in the headlines, the EU and the US have agreed this deal on energy supplies of LNG from the US to Europe to reduce that European dependency on Russian gas, 15 BCM over the year, and Germany saying it hopes within the mid-2024 period to be essentially weaned off Russian oil and gas. We're going to bring you those remarks, of course, as soon as we get them. You can see the podium there waiting for the President of the United States and the President of course, the European Commission for those comments on the back of that deal. Welcome to Bloomberg Surveillance Early Edition. I am Tom Mackenzie in London. Matt Miller, Kailey Leinz in New York. Anna Edwards is off. Kailey, let's start then with a market reaction. Relatively benign here in Europe, despite all the geopolitics. A different picture in Asia, though.
Yeah, those headlines crossing a little bit too late for the Asian session, Tom. And by and large, it was a down day in Asia overnight. The big drags were China and Hong Kong, specifically tech stocks. The Hang Seng Tech Index falling about 5 percentage points. And that is after U.S. regulators yesterday said it's premature to say a deal has been reached on Chinese companies listed here in the U.S., their future, considering all the uncertainty around auditing. So still the potential that some of those may get delisted, that dragging on tech stocks. I also wanted to point to one stock in particular, and that is Rusal, of course, the Russian aluminum company that is listed in Hong Kong. Bloomberg reporting overnight that some traders within China have reached a deal to send 30,000 tons of alumina to Siberia for Rusal's use. Really interesting to see if that indeed works given the sanctions environment. But that stock still down 6% overnight, but that's following a 14% rally yesterday as stocks reopened in Moscow. In other asset classes, of course, we saw a big selling pressure in U.S. Treasuries yesterday, and that followed through in the Australian bond market. The two-year yield up about 7.5 basis points to 158. That is the highest going back to March of 2019. And finally, have to point out the Japanese yen because it is actually stronger against the dollar today for the first day in 5. The big outperformer in Asia, stronger by about 0.7%. Still, though, at 121.49, the yen is right around its weakest level since 2015, Matt.
All right, very interesting to watch the yen, especially after Kuroda's comments that it's not the most important factor in inflation. Take a look at what's going on in the U.S. here. S&P futures, it's a Friday. We're down 0.2%, but we were up 1.4% yesterday, making up more than we had lost the previous day. In fact, we're only down on the S&P 5% year to date now. So this recovery is real in stocks. You can see investors are buying the 10-year bond, pushing the yield down just a little bit, still to 234.30. So still at the highest level that we've seen since May of 2019. NYMEX crude coming off 2.6%, just under 110 a barrel for Texas Intermediate. And Bitcoin not doing a lot, but holding at 43, almost 44,000. So Bitcoin has been really stable, moving only to the upside gradually over the past few weeks. Very interesting to watch. Tom, what do you see in Europe?
Yeah, and Matt, we've got a divergence in terms of the European performance this week versus the US. The European markets have underperformed. It's a mixed picture today. The DAX is posting gains currently of a little over 0.1%. You're seeing negativity on the FTSE 100 here in the UK, down 0.2%. Gains in Italy, Spain. The CAC 40 is essentially flat. A bit of a defensive tilt towards utilities and real estate on a sector basis, but it's banks and energy that is selling off. We're also getting a line crossing around German IFO sentiment. That gauge missing for the month of March, just underscoring the fragility of the recovery that you're seeing, of course, in Europe's largest economy. When it comes to the rest of the asset class here, before we move on to Russia, broadly then, range-bound, as I said, for the European stock 600. The German Bund is bid by about 3 basis points lower on the yield there. Euro is also bid up 0.1%. Brent lower by 2.5%. A lot of that will be down to this European-US deal. And Kailey, you've got more on that.
Well, yeah, of course, we continue to monitor Brussels. We are seeing live pictures from there. President Joe Biden is speaking now. Let's listen in.
Use the profits to drive his war machine. And that's why earlier this month I announced the United States would ban all imports of Russian energy to make it clear that the American people would not be part of subsidizing Putin's brutal, unjustified war against the people of Ukraine. At the time, I noted that we were able to take this step when others could not because the United States is a net exporter of energy with a strong domestic industry. And the United States welcomed the European Union's powerful statement earlier this month, committing to rapidly reduce its dependence on Russian gas. Today, we've agreed on a joint game plan toward that goal, while accelerating our progress toward a secure, clean energy future. This initiative focuses on 2 core issues. 1, helping Europe reduce its dependency on Russian gas as quickly as possible. And secondly, reducing Europe's demand for gas overall. To address the first point, the United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year. And as the EU works to discontinue it buying Russian gas well before 2030, it will also work to ensure additional EU market demand for 50 billion cubic meters of LNG from the United States annually by 2030. To accomplish this, the European Commission is going to work with the member states to store gas across the continent, to build more infrastructure to receive LNG, and to take steps to increase the efficiency of gas. This build-out will occur in a way that is consistent with, not in conflict with, the net zero climate goal that we're shooting for. It's going to take some time to adjust gas supply chains and infrastructure that is built the last decade, for the last decade. So we're going to have to make sure that families in Europe can get through this winter and the next while we're building an infrastructure for a diversified, resilient, and clean energy future. At the same time, this crisis also presents an opportunity. It's a catalyst that will drive the investments we need to double down on our clean energy goals and accelerate progress toward our net zero emissions future. That's what the second part of this initiative is all about. The United States and the European Union are going to work together to take concrete measures to reduce dependence on natural gas, period, and to maximize the availability and use of renewable energy. We're going to accelerate widespread adoption of energy-efficient technologies and equipment like smart thermostats, work to electrify heating systems all across Europe. We're going to invest in innovative solutions and technologies to make the switch from fossil fuels. And together, we'll advance the use of clean and renewable hydrogen to reduce our carbon emissions. These steps will increase energy security, economic security, and national security. And we're going to stand up a joint task force to implement these changes and drive progress that will be co-chaired by representatives from the White House and the President of the European Union's team, the Commission's team. Madam President, I know that eliminating Russian gas will have costs for Europe, but it's not only the right thing to do from a moral standpoint, it's going to put us on a much stronger strategic footing. And I'm proud to announce that we've also reached another major breakthrough in transatlantic data flows. Privacy and security are key elements of my digital agenda. And today, we've agreed to unprecedented protections for data privacy and security for our citizens. This new arrangement will enhance the Privacy Shield framework, promote growth and innovation in Europe and the United States, and help companies, both small and large, compete in the digital economy. Just as we did when we resolved the Boeing-Airbus dispute and lifted the steel and aluminum tariffs, the United States and the EU are finding creative new approaches to knit our economies and our people closer together, grounded on shared values. This framework underscores our shared commitment to privacy, to data protection, and to the rule of law. And it's going to allow the European Commission to once again authorize transatlantic data flows that help facilitate $7.1 trillion in economic relationships with the EU. So thank you again, Madam President, for your personal friendship, for your partnership, and above all, your leadership. All of this is bringing the European Union and the United States even closer together, and that's a win for all of us. So I thank you all, and I'm now going to yield the podium to the President. Let me pull this out. Earn my salary here. Is it out enough? There you go. Thank you.
Thank you. Thank you. Mr. President, dear Joe, your presence here in Brussels this week at the NATO summit, at the G7 and at our European Council sends a very powerful message to the world. The transatlantic partnership stands stronger and more united than ever. And we are determined to stand up against Russia's brutal war. This war will be a strategic failure for Putin. Our cooperation on the 4 successive waves of sanctions against Russia has been extraordinary and exceptional. The sanctions are now working their way deep into the Russian system, draining Putin's resources to finance this atrocious war. Our work on sanctions also shows that when we act together, we're stronger and we really can make a difference. And we are continuing to reinforce our cooperation in many strategic ways, on humanitarian and security assistance to Ukraine, on energy, on fighting the threats against our democracies, on solving outstanding issues in the EU-US cooperation, including in data protection and privacy. In a world faced with disorder, our transatlantic unity upholds fundamental values and rules that our citizens believe in. Let me focus first on refugees. Until now, around 3.5 million people have left Ukraine, half of them children. Every second refugee is a child. And the numbers will keep rising. So together, we are mobilizing massive resources to support those displaced by the conflict, be it in Ukraine or in the neighboring countries. Just this week, for example, I announced that the European Union will...
All right, there is Ursula von der Leyen, European Commission President, speaking with Joe Biden, President of the United States, talking about reducing their dependence on Russian gas. The EU has made a deal with the U.S. to buy more American LNG. It's a process that's going to take a long time, and as the President said, it may seem counter to our climate goals. He tried to make the point that you need to use energy to get to a zero carbon level. Let's get the latest with our reporters from Brussels and Poland. We begin with Maria Tadeo, our European correspondent. Maria, what did you think there of Biden's announcement, of von der Leyen's announcement, and this? It seems like a milestone, but it's going to take a long time. And even if we delivered all the LNG we have, they just don't have the terminals to accept it.
Yes, and you know, Matt, when you look at this and you look at the numbers, of course, they talk about 15 BCM this year. They argue this will neutralize just, of course, the LNG that's coming from Russia. The bigger issue is the gas through pipeline. As you mentioned, a lot of the infrastructure in Europe is actually designed to take in through pipelines. So again, you're very right to point out that this is going to be a challenge over perhaps the next 2 to 3 years. But to me, it was striking two things. The President of the United States said, with this deal here, we make a strategic decision to get closer. And that can only be a win-win for the European Union and the United States. He also said, I acknowledge, and it is clear that unplugging for Russia will cost money in the short term. And the reality is, Matt, we're already seeing that reflected in bills across Europe. And this creates a lot of social tension on the ground for many governments here in Europe. But he did say over the long term, this is a strategic choice that will make us stronger. Now, of course, the question is, how is Russia going to respond to this? The other thing that really caught my eye from this is, of course, the European Union saying and making it clear we are going to work to have sustained demand and create a market for American LNG until 2030. They also put a number on it, 50 BCM. And, of course, that line from Ursula von der Leyen, Vladimir Putin has made a strategic mistake by going into Ukraine.
I wonder, you know, as we were talking yesterday about the fact that Russia is demanding payments in rubles, the EU has doubled down on the fact that they're not willing to do that for the gas that they need to survive. If Russia cuts off the gas supply now, which is a realistic threat, what does Europe do to fill that void?
Look, I asked that question to pretty much everyone yesterday. In fact, I put it to the Italian Prime Minister, Mario Draghi, too repeatedly. I asked him in English and I asked him in Italian, so there was no loss in translation here. And he said, what I can tell you is that this would be breach of contract, that there is no appetite to renegotiate anything and pay in rubles. In fact, he also said, why should we pay in rubles? At this point, we don't even know how stable this currency is. And he said, for the time being, we're not moving. Then, of course, the other thing is, will Russia cut the flows? That is something that Europeans don't want to speculate on. They say, and they're aware it is a possibility, but they always say, if he does this, it's going to hurt us both. It will hurt the European Union, but it will also hurt Gazprom, which is a money-making machine for Russia. So this is a choice that Vladimir Putin will have to make.
All right, Maria Tadeo, our European correspondent in Brussels, thank you so much for the European perspective. Let's get the American perspective now. Anne-Marie Horton, our Washington correspondent, is joining us from Warsaw in Poland, where President Biden is traveling to today. Anne-Marie, just walk us through the Biden administration's thinking on this, because as the president alluded to and Matt was speaking about, in many ways this runs counter to the president's own climate agenda.
Yes, of course. We're just not far along in the transition for Russia to just to Europe to just shut off natural gas in general, or the world. And the president understands that. But we should note this is just a task force at this moment, and these are plans. And 15 BCM out of 155 BCM is just under 10% of what Russia or the Europe imports from Russia throughout the entire year of last year. So this is very tiny, but it could potentially import as much as Russia does in terms of LNG, what's not going out of the pipelines. But the administration has been working on this for weeks, not just about potentially shoring up LNG supplies out of the United States, but going to other producers around the world. And we've seen European officials do that as well, including the German economy minister last weekend going to Doha. So they clearly are looking for other ways to get LNG, as they realize that at some point, potentially, they're going to have to loosen that dependence incredibly.
Anne-Marie, what a line crossing from the Russian foreign minister, Mr. Lavrov, just in the last few seconds, saying that the West wants to destroy Russia's economy and Russia itself. A line there from the foreign minister of Russia, which brings me on to a question about how real these concerns are in Washington about the erratic behavior, the potential erratic behavior of Vladimir Putin, and the possibility that maybe he resorts to biological, chemical, even so-called strategic nukes as he is backed into this corner. How real are those concerns?
Well, they're clearly real, given the fact that the G7 put this in a statement, meaning they warned President Putin on using chemical, biological, nuclear weapons, weapons of mass destruction. The issue is right now when you talk to leaders and you talk about, quote, severe consequences you are going to put on Russia. What are those severe consequences? Were they able to get to some sort of agreement yesterday? The Latvian president said to me, they know what those consequences are. They're just not publicizing them just yet. And the issue is, though, at the moment, is that the United States doesn't see a need to, at the moment, in terms of the nuclear posture, make an adjustment. And Press Secretary John Kirby made that very clear to me yesterday. But of course, they are concerned about this. It's something they monitor every day.
Anne-Marie, thanks very much. Anne-Marie Horder, and she is our Washington correspondent currently on the ground in Warsaw. Let's get more now on President Biden's Poland visit and the humanitarian crisis that we heard Ursula von der Leyen talk about just briefly. Bloomberg's Aggie Cantrell joins us now from Poland. Agatha?
So, yes, we're expecting President Biden to arrive in Rzeszów, where I am now, around about 2 p.m. local time. We're expecting this visit to Rzeszów before he goes to Warsaw to be twofold. He's going to be focusing on getting a humanitarian briefing, hearing about the situation in Ukraine and the people crossing the border into Poland. Remember, Poland has taken over 2 million of the refugees that have crossed the border into the EU. And as well, he's going to be talking to the 82nd Airborne on the security aspect of this. Poland itself is seeing a bolstered NATO force in order to not only aid Ukraine, but also to bolster that eastern flank, as Poland shares this large land border with Ukraine. And so both these aspects of the talks that he's going to have today in Rzeszów are going to be key to what Poland is looking for from the US and from their NATO allies.
OK, Bloomberg's Aggie Cantrell on the ground in Rzeszów, Poland, ahead of that visit by President Biden, of course, where he'll be meeting with his Polish counterparts. Coming up, Mark Haefele, UBS Global Wealth Management CIO, and Aneeka Gupta, WisdomTree Equity and Commodity Strategist. How are you positioning amidst all of this geopolitical angst and uncertainty? Plus, Russian businessmen. Well, they're house hunting in Dubai, and Chelsea owner, at least he's the owner for now, Roman Abramovich, is among them. Read more from today's Big Take by typing NI Big Take into your Bloomberg terminal. Plenty more ahead. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Tom Mackenzie in London. Anna Edwards is off today. Well, Matt, Tom, of course, President Biden of the U.S. and the EU Commission President Ursula von der Leyen just wrapped up a press conference in which they announced an energy deal between the U.S. and the EU, announcing an agreement to boost the supply of LNG to Europe from the U.S. by the end of this year with at least 15 billion cubic meters. The aim, of course, is to wean Europe off of Russian natural gas. And under the agreement, EU member states will work to ensure demand for 50 billion cubic meters of U.S. LNG until at least the end of 2030. You are seeing the oil market moving off of this. The oil market has been moving quite a lot lately. We'll talk about that, inflation fears, how it influences where you want to be positioned in this market. Mark Haefele, UBS Global Wealth Management CIO, will be joining us next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition, and here is what you need to know. The US has struck a deal to help Europe replace Russian gas imports. A senior European official says it will lead to additional imports of liquefied natural gas from the US. The issue is critical, as Russia is the EU's biggest natural gas supplier. US officials are worried that Russian President Vladimir Putin may lash out dangerously. Russian troops are bogged down in Ukraine, and some say Putin's tendency when boxed in is to escalate. Meanwhile, President Biden wants Russia booted out of the G20. And European Union officials suspect China may try to soften the impact of sanctions imposed on Russia. They say Beijing may be ready to supply semiconductors and other tech hardware to Moscow. China's potential influence on Russia was a central issue in talks at the NATO, EU, and G7 summits Thursday in Brussels. I'm Tom Mackenzie in London. Matt Miller, Kailey Leinz in New York. Anna Edwards is off. And Matt, across Europe, it seems that markets are really trying and failing to get any grip on what is happening. The geopolitics, of course, the uncertainty there, and of course the action we've had from the Fed in the last few days. Matt?
Yeah, I mean, markets typically don't unlike certainty, and markets typically don't like rate hiking cycles. But in the U.S., we've seen an incredible recovery. The S&P 500, okay, futures are down a little bit right now. But keep in mind, at one point we were down 14% year to date. Now we're only off 5% year to date. We're up 1 or 2% for the week. So it hasn't been a bad run for equities amidst a war, inflation, a rate hiking cycle that could get pretty serious. The U.S. 10-year yield right now is off a little bit, but still at 235.21, so the highest level that we've seen since May of 2019. And NYMEX crude is still hovering around 110 a barrel. Texas Intermediate trading at 109.82. It's off 2.25%, but still relatively high levels. Speaking of high levels, Bitcoin right now over $44,000. Typically, it's a risk indicator. It's actually not moving that much, but I think just the stability and the level are really interesting for the digital currency. Kailey, what do you see in terms of the pre-market movers?
Well, you were talking about the decline we're seeing in oil. That is translating through to energy stocks and pre-market trading here in the U.S., one of them being Marathon Oil, which is moving lower by about 1.75%. As for some stocks that are moving higher in early hours, though, I wanted to point to Bed Bath & Beyond. Bloomberg reporting overnight that the company is close to reaching a deal with activist investor Ryan Cohen to add 3 directors to its board. Of course, Cohen had been pushing for a potential sale of its Bye Bye Baby business, or maybe a sale of the company at all, but it looks like it will just be the moves on the directors. That stock is up 1.6%. And then finally, I wanted to point out that pot stocks are doing incredibly well before the bell. You had a House panel yesterday saying it will consider a bill to decriminalize marijuana at the federal level. So you had both Sundial Growers and Tilray up more than 20% in yesterday's session, and those gains are continuing in early hours. Matt Miller sounds a little excited, Tom. Up 23% for Sundial, up 17% for Tilray.
All right, from the excitement of pot stocks to what is happening in Europe, which is much more bland and less interesting, frankly. You're seeing losses of about 0.2% across the benchmark stock 600. So European stocks set to underperform US equities as things stand for the week. Of course, you had that deal, as we mentioned in the headlines, between the Europeans and the US on the supply of LNG. It's a process that will take a lot of time, of course. The German Bunds are bid. They are down in terms of yields by about 3 basis points. Euro is up. That's largely down to dollar softness, up 0.1%. And of course, as we're talking about the energy complex, and just to remind, Brent crude down more than 2%, currently at 116 for Brent. We want to look as well at Russia if we have time, because it's the second day since the Russian markets opened. Pressure across the Russian space, and you're seeing losses of around 3.5%. There were gains yesterday. All the caveats: 33 stocks, no short selling, foreigners can't sell. Some of the biggest losers, VTB, but also Aeroflot, the last time I looked, down around 15%. The ruble, though, higher by about 3%. Sberbank and Gazprom, as you can see, under pressure. Gazprom, the big supplier of energy, down 10% on the back of that news around a U.S. EU energy deal. Matt?
All right, definitely a deal that we've been watching and will continue to report on. Right now, I want to get back to the markets. Mark Haefele joins us, UBS Global Wealth Management CIO. And Mark, you know, it hasn't gone under the radar because we've been talking about the drawdown in global bonds, but I don't think people have gotten as alarmed about it as they would if you'd seen this kind of drawdown in global stocks. I mean, this is the worst quarter for global bonds on record in my lifetime, and I'm pretty old. So what does this mean for you? What does this mean for your clients?
Well, one of the things it means is that we're starting to see some people think about this inflation picture and this Fed hiking picture and incorporate it into their thinking. You know, I mean, the Fed basically is the market's kind of pricing in, and the Fed is saying its terminal rate is going to be 2.5%, and you know, and the 10-year jumped right up there. So I think that's one of the factors. But you know, also what this response in the equity markets kind of says, there's a lot of people out there, and I think this is something Bloomberg has mentioned, which is that there are no alternatives to equities in some ways because the bonds look toxic, and with the inflation, cash looks toxic.
Yeah, so Tina perhaps is still the name of the game, Mark. At what level does that change, though? What level of yield would make them start to look more attractive in the bond market relative to equities?
Well, you know, as you said at the top of this segment, there's a lot going on in the world, and I think really so much of it is out of control of the markets and in the hands of politics. And I'll just give you one example. We think that the market right now in the short term is really going to be pricing off an understanding of if we have or when will we hit the peak sanctions and oil prices. And I think that, that's a political decision because there's a survey out in Germany that 55% of the people in Germany would accept higher sanctions, even if it means supply disruption. So while you have that level of uncertainty, which, could send Europe into a recession if we were to, pull that supply of energy very quickly, it's hard to get a read on certain levels here before we get a little more on those kind of issues.
So with the uncertainty you speak of, Mark, how much should investors be adding to hedges here, and what should those hedges be?
Yeah, well, we still like commodities and energy-related equities here. I think, think about commodities. It's not just about the supply disruptions around Ukraine. It's also there is a drought on pretty much every continent except Australia at the moment. And, also as we come out of COVID, we do think that the demand for energy is going to remain strong and be strong through the second half of the year. And so even if we get some resolution in the tragic Ukrainian war, we still think that energy can be well supported into the second half of the year.
Mark, what do you do with tech at this point? There's been a bit of revival. We saw the positivity around NVIDIA yesterday stateside. Is there an opportunity in tech, or has it got further to run?
Well, look, I think that the belief in that all tech is great quality growth, that has come apart since last October. And so I think you have to be more selective, focused on, more growth at a reasonable price in tech. But we're also looking at, how we're kind of in a new era now where security is much more important. And so that would direct us to further into the theme of cybersecurity, which is an area we had done some work on before, but we're more confident in now.
You may have heard me giggle there because of an internal discussion about pot stocks here. But I wonder what you think about, this Vice stocks at a time like this typically are very defensive. Not saying that I'm not lumping pot in with, cigarettes and alcohol stocks, but that also brings up the interesting argument about the ever-changing nature of ESG investment. Mark, what do you think about that? How important is it to clients?
Well, look, it's very important, and it's actually a very active discussion that we have about what should count as ESG. And there are regulatory decisions about what qualifies in the ESG bucket, but we also have a client view about what qualifies as ESG. And so what we try to do is give clients kind of a X-ray through their portfolio and how their portfolio and different parts of their portfolio score according to the affinities that they have, whether they believe clean water is the most important, or women on the board of a company is the most important. We want to give people that as a choice so they can make that decision with their own portfolios and their own wallets.
Okay, Mark Haefele, UBS Global Wealth Management CIO, on how to navigate ESG and, of course, the geopolitics of the moment. Some opportunities maybe still within the energy sector. Coming up, Aneeka Gupta, WisdomTree equity and commodity strategist. We're going to drill down then into some of those equity picks, at least on a sector level, with Aneeka, how to position. More advice there and insights. Stay with us. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, General Atlantic Senior Advisor and Nobel laureate Michael Spence. That's at 7:30 a.m. in New York, 11:30 a.m. in London.
The United States, together with our international partners, we're going to work to ensure an additional 15 billion cubic meters of liquefied natural gas, LNG, for Europe this year.
We have a deal. President Biden speaking earlier in a news conference with EU Commission President Ursula von der Leyen after the U.S. struck that deal to help Europe replace Russian gas imports. Joining us now is Aneeka Gupta, Research Director at WisdomTree. Aneeka, 15 billion cubic meters by the end of this year. Can we just talk about whether or not that is a realistic goal, considering the infrastructure on the export side here in the U.S. and on the import side in Europe?
You're right, Kailey. It's it's one of the most important topics of the day, and I think that's why the result of the summit so far has been the EU has failed to agree on stopping imports of Russian oil. That just points to the fact of how unrealistic this deal actually is. And the truth of the matter is, we have seen LNG exports from the U.S. Rise in an exponential pattern. And that is going to continue. But looking at the figures, 15 billion cubic meters by the end of this year, I think it's quite optimistic. So the EU is definitely, the US is doing everything it can to convince EU to cut off ties of Russian oils, of their dependence on Russian oil. It still looks to be quite a tricky position.
You know, Aneeka, lived in Germany for the past 6 years, and with Agatha Cantrill as my producer, would run into the former Energy Secretary, Dan Brouillette, all over the place, at the U.S. Embassy in Berlin, at the Defense Conference in Munich, and he was just banging his head against the wall, trying to convince the Germans to build more LNG, terminals, to accept more LNG from the U.S., and they didn't even really want to have the conversation with him. Is there any other choice?
We're regretting it now.
Yeah, I'm sure. Is there any other choice at this point for them if Russia cut off the gas supply? Can they fire up the nuclear reactors that they shut down? Can they mine some more of that dirty brown coal that they have such ample supply of? What will they do?
To me, it really points to one direction, and that's demand destruction. Yes, you're right. We can definitely look at other alternatives such as renewable energy, coal, but obviously this coal definitely conflicts with EU being the champion, on the energy transition front. And given how vulnerable Europe is right now to its energy infrastructure in Russia, it's just accentuated the need of EU's energy transition plan. So the only alternative is demand destruction. We will have to see rationing of energy usage come into play in order to reduce that reliance, in order to reduce that dependence, until, as Kailey mentioned, the necessary infrastructure is in place. And as you said, the previous decisions, the previous mistakes that we've made so far of not building out this infrastructure, it is going to hurt, and rationing will have to come into play.
So, Aneeka, that's the European side, the lack of infrastructure that is needed to absorb this LNG from the US. But on the US side, we've been hearing from executives saying, look, we just don't have the capacity, whether it's because we don't have the manpower or because we don't have the certainty when it comes to that policy around investing to actually get more LNG out of the ground. So you talk about an ambitious 15 billion cubic meters per year. Can the Americans even step up and provide that?
I think they definitely can. We've started to see, stockpiles at Cushing increase. We've started to see the rig numbers increase. They're now at the pre-COVID levels. So I would say, yes, the U.S. is definitely stepping up its production capacity. We might even see an increase in shale oil drilling. But obviously, this is all going to take a bit more time compared to the EU just immediately snapping off imports from Russia.
Just before you let you go, Aneeka, just very quickly, your view on the gas price from here. It's been under a little bit of pressure on the back of this deal. Where do you see things going from here?
So gas prices have definitely risen very strongly on the back of the news that we've, on the back of these three main catalysts, the EU considering cutting off imports from Russian oil, Russia demanding payment in rubles from its unfriendly neighbors, and I think that that area of uncertainty is going to continue to provide a tailwind for European gas prices.
Aneeka Gupta, great insights. Thank you for joining us this morning, Research Director at WisdomTree. OK, later today, we're going to speak with the French ambassador to the US, Philippe Etienne, and the German ambassador to the US, Emily Haber. We'll get their insights, of course, on this deal and how the transatlantic relationship can maybe support a pushback further on Moscow and Russia. Stay with us. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz in New York and Tom Mackenzie in London. Anna Edwards is off. Now, Daimler Trucks is currently suspending business in Russia, which includes its cooperation with Russian truck maker Komatsu. I spoke with the CEO, Martin Daum, earlier at Daimler Trucks' annual results conference.
I mean, the war had two impacts on our business. First of all, we immediately stopped all our activities in Russia, and we are going in the first quarter to write off our entire assets in Russia, which will be about a 200 million hit into our results in the first quarter. Secondly, we certainly are going to lose our business we had in Russia, Belarus, and the Ukraine, but this is less than 1% of our sales, so I would say we can compensate that in other regions of the world. Everything else, I would say we still see a strong demand for our products. We have an absolutely great product lineup, both in Europe and in the United States. And I see here not so much such big impact at the moment into our business.
So demand remains strong. I wonder about moving your supply chain around. Is that work that you've got to do?
Our supply chain, fortunately, wasn't impacted too much by Ukraine and Russia. We basically have no impact on that side because we were fortunate not to have any suppliers in Ukraine, as some of our competitors had. And I'm sorry for that situation for them. But here we are the lucky ones this time.
In terms of innovation on the sustainability side, are we going to see fully electric trucks from Daimler?
Yeah, absolutely. We already have a pretty broad lineup, but we are continuing. We are launching in the United States our long e-Cascadia for a 300-mile range. We are going to launch that in pretty soon, first quarter, second quarter of this year, going into serious production, meaning really able to sell this truck in quantities. We are already very active on the school bus side in North America. We have 50% market share in the electric city buses in Germany. We are expanding our sales in Europe for that truck. Mercedes ramps up. We bring out a specialized refuse truck on as a zero-emission truck. As you see, I can continue and go on forever. Right. It's a whole breadth of our product lineup going zero emission now and in the future.
Until when? I mean, when will there be no more internal combustion engines driving Daimler trucks?
It's a very difficult question. No more it will be a long way. I would see we see a significant ramp up in the second half of the decade. It depends, goes from region to region. Look, we are market share leader in Saudi Arabia as well as in South America. There's certainly the US and Europe will lead the way. Other countries will follow. Inner city traffic will be first before we go to every single nook and cranny on the long distance one. I would say this is a long path until it's 100% zero electric. But the big ramp up will happen 4 or 5 years down the road. Always think it's not just our product lineup, it's the infrastructure as well. It's an enormous amount of energy we need along the road before the entire long distance is going zero emissions.
Let me finally ask you about autonomous functionality. You've already got a tremendous amount of safety technology in the trucks, but at what point will they be able to drive themselves?
I would say potentially sooner than we think. We are working both with Waymo and with our own subsidiary, Torque Robotics, on autonomous driving, especially in the United States. And stay tuned. I think we'll come up with more news in the second quarter of this year.
Daimler Truck CEO Martin Daum there. And important to point out, Tom, as well, that this is the first quarter they've operated as a fully separate business from Mercedes-Benz Group. The two split last year.
Yeah, and just a reminder again of the challenges that corporations face if they still have a footprint in that market. Talking of the Russian market, the equity market opened for the second day only since, of course, the start of this invasion of Ukraine. Under pressure, the IMOX, which is the benchmark over in Moscow, down close to 4%. The ruble is up. And on a individual corporate level, you're seeing particular pressure on Aeroflot, Gazprom, VTB Bank. And you had the National Settlement Depository over in Russia saying that they have had their account blocked with Clearstream. A reminder that Russia is still closing in potentially on a default. There's plenty more coming up. Bloomberg Surveillance is ahead. We're going to hear from Michael Spence, General Atlantic Senior Advisor and Nobel Laureate, and the French Ambassador to the US after the US and EU struck that deal on energy. The Transatlantic alliance is stronger than ever, according to the US President and his counterpart in Brussels. Stay with us. This is Bloomberg.